Good morning. It's a wonderful Wednesday, July 16th. I'm Zach Howard, and here's your morning market update from me. S&P 500 yesterday, not much of a day if you just look at the closing price. See the screen, down 24 points, still near all-time highs, 0.4% down day, but it was a poor day in the broader market of those 500 companies. When you take away those mega cap stocks, NVIDIA, the biggest company in the world, over $4 trillion in market cap, fiat money value, hit a new all-time high and really pushed the index higher with its weight, 7.3% weighing in the index now because of that market cap value. However, 85% of the stocks were down on the day, but you wouldn't know that if you just looked at the screen, clickbait, and see what's happening. Maybe they're setting up here for a shorter-term correction in markets, which is probably what we need here this summer. People are on vacation. Markets don't go straight up. And we've had a great run here, but we are into earnings season. Financial companies started reporting yesterday, and banks started today. Goldman Sachs, another massive beat. Of course, Goldman Sachs always wins. So corporate buyout window, one of the biggest buyers in the market is company's own stock. They cannot buy their shares back into earnings until they report. So that's a big buyer out of the market here for the next few weeks. Then we have volatility control funds. With the volatility being pulled down so low here the last couple of weeks, they've deployed into the market. So there's not a lot left to go there to put a bid into market. We're exhausted with tariff headlines or what other geopolitical headline there is. So that's kind of gone away from a certain standpoint. And it's just time for a break, maybe. Maybe just chop around here for a little bit in some of these names. But we're still in bullish trend and don't need to really get concerned. But if you had a good run and you're trading, this is probably an idea not to trade as much, take some chips off. Back to the macro data from the Keynesian standpoint of fiat money printer has to continue to burr, fiscal spending continue to burr to keep this all going. Just from the math standpoint, that rate of change is stuff getting better, staying the same, or going down. From a acceleration, deceleration standpoint, inflation is now reaccelerating. That's been my call for months. US CPI, the previous month, the previous year over year, readings all show higher highs, especially that core reading, which is what you want to pay attention to. This is in the backdrop, too, when we had lower oil prices. So now we're having a reacceleration in energy prices, which is going to be tailwind for July, August, higher CPI again. Canada, same thing. Its manufacturing sector is going to struggle outside of housing, really making cars and oil. That's what we got here in Canada. UK, CPI, same theme. Higher highs from where they were previous. That's what we're looking at, where the puck was, where it's going. And it's the same theme that I keep hammering on. The fiscal austerity, fiscal constraint is not happening. It's gone away. That ended in 2020 when they shut down the world and printed all this money. And there's no sign of any politicians wanting to dig their heels in and say, I'm going to stand out from the crowd. 2/3 of countries have abandoned their prior 2019 constraints. And what is the incentive to stop it here at this point when everybody's doing it? Negative percentage of GDP deficits as far as the eye can see. And this is in good times. Money printer go brr. Debasement of the currency. That is the themes. Financial repression. These are all the things we continue to talk about. And you will see this now get reflective in the bond market. Okay, that the long duration bonds, which I continue to talk about, you're seeing a breakout here in the US 30-year yield, higher bond yield, and those long duration bonds means less buying, less demand, less value for what the value is of that bond. It's more susceptible to interest rates rising. Big breakout of psychologically over that 5% number. Talked about Japan's long duration bonds, UK, Germany. They're all the same theme. The bond market will eventually force some of these governments to kind of weigh in how they allocate their spending, but more importantly, how they raise money going forward. It won't be on the long duration. It'll be on the shorter duration time scale that central banks can assist in. Bank of Canada, they're going to probably lower the rate here at the end of the month, but they can't do nothing about the long duration side of the bond because that's a market mechanism, buyers and sellers. However, they can intervene and buy the bonds like they did back in 2020, quantitative easing, which they've already started to do. But that 5-year rate, that's now broken out above 3% and continues to rise here this week with fiscal spending going to accelerate in Canada. That's bad news for people looking to renew a fixed rate mortgage and trying to get a lower fixed rate. Not going to happen. The floating rates are going to come down, but the longer term rate, the Bank of Canada, unless they buy the bonds, is really not going to be able to control that rate continue to rise unless something else happens. On to Bitcoin, which is the alternative to all this madness. Infinite supply of fiat money versus the 21 million Bitcoin ever. 125 public companies now have adopted what we've been talking about, putting Bitcoin on the balance sheet, being an alternative to the fiat wealth compensation of bonds. Cantor Fitzgerald out yesterday looking to do a SPAC with one of the OGs in the space, adding back $4 billion SPAC deal, going to pledge some Bitcoin as equity into the deal, upside from there. But the theme continues to be these bigger players are seeing the supply-demand dynamics play out in Bitcoin, what I talked about yesterday, and looking to secure that before other people figure that out. 125 companies publicly, there's 50,000 public companies. 125 divided by 50,000. We are so early. This is a great podcast. Highly recommend you take the time to listen to it, either on YouTube or you're walking, your dog, driving, whatever. With Marty Bent's TFTC yesterday. Go check it out. Some crazy numbers in this podcast. And you look at inflation through the backdrop of debasement of currency in Bitcoin terms. We have already experienced hyperinflation from that standpoint. But 1 billion people buying $1,000 iPhones every year, that would be the equivalent of $1 trillion in money printing. Every single year, $1 trillion in money printing. That's some of the numbers that is just thrown out in this podcast. It really puts it in context how crazy the whole fiat game is. Besides that, I got my summer book, The Creative Act, A Way of Being, Rick Rubin. I'm highly recommended by people I like and follow. Hopefully I get some time to start reading that thing because it's a busy summer. But that's what I got for you today. We will see you tomorrow, perhaps.